Hi, good day to all of you. I'm Kumar from Learn with Kumar, and this recording is about our November 2020 case study, strategic case study, Knowledge City Technology Park or KCTP. And I've done a little video on the pre-scene of this company. I think 2 days back, today I think it's 16th of October. 2 days back, we got the results of the last case study runabout, and now you can read even the examiner's report and all the variance in the exam. And now, as you all are getting ready for your final hurdle in the CIMA career of getting through the exam, you are just one exam away from getting those valuable, precious 4 letters ACMA or FCMA, CGMA. And for that purpose, my idea is to help you all with the pre-scene of KCTP at this moment of time. So we know this is a company that what we are dealing with is all uh, about a quoted company that owns and operates a technology park. It's a private company with a 20% investment coming from the university. University were the founders, but they listed out in 1999. So I'm going to talk about a little bit about this one. Just to introduce myself, I'm Kumar, Learn with Kumar. 13 years of experience of online tuition, and now I'm giving my own tuition and on online via Zoom or WebEx, one-to-one at very affordable rates all over the world. So we know it's a listed company. That means we are under corporate governance, stock exchange regulations, and we need to comply with other things like integrated reporting, etc. Good, good corporate governance. Incorporated in 86, listed in 1999. One thing being a listed company, we have access to the stock exchange, through the stock exchange for security funding. Uh, Capital City University, they were the founders of this organization. Right at the moment, they are holding 20% of the shares. And to look after their 20% of these shares, they do have a non-executive director. Now, 20% shares means generally it gives them significant influence. So I do not know, I don't agree with the with having a non-executive director, but she cannot be an independent person because she's looking after the 20% interest in this university. So I think rightly and appropriately, she should be in the executive category as a director. It's based in a country called Adviland, a developed economy. That means the cost of wages, etc., are fairly high. We do have a CEO, a non-executive chairman, three executive directors, and four NEDs. So we can see, as far as the corporate governance is concerned, the majority should be NEDs, which is falling in line. But I think there may be certain changes what we should be looking as we go down in the corporate governance, because they have the three committees or four committees, I think, the Audit Committee, Remuneration Committee, Nomination Committee, and also they do have a Risk Committee, which is very important. Generally, it is said the chairman of the company should not be the chairman of those committees. We are not very clear. They are given a chart. We are not very clear whether he is the chairman. But in the unseen, if they say he is the chairman, the board chairman is the chairman of any of those committees, that's not good corporate practice. He can be a member, but he should not be a chairman of those committees. And also, the audit committee should have a person with relevant financial knowledge and experience. Now, there again, we can see they do not have anyone in that category in the audit committee. So probably you might need to think of some changes in the board structure for us to go forward, because these technology parks, it all depends. The success critical, one of the critical success factor will be good corporate governance, good people at the top level. This is not manufacturing. This is not even normal kind of providing services. It's a much more long, far-sighted kind of thing. And therefore, you need at the board level very, very experienced, knowledgeable, balanced board. I don't have any things to talk about the board of directors. Generally, they seem to be very good, except this one person holding the NED position with a 20% holding, or looking after the 20% holding, how independent she could be. And of course, the other one is the audit committee should have a person with financial experience. So we are the largest in Adviland, and we have, I think, 479 million kind of a turnover. The second company is almost there, 417 million kind of a company. There are 27 companies in this setup. So entry barriers seem to be fairly low. So you might find another company joining in the process, but funding for these companies are very difficult because the returns are very, very low. So strategically, you as the senior manager finance should be looking in terms of how to increase the revenue. Costs more or less will remain same because you are already occupied, but what kind of additional services, value added services we can give to our tenants, which will make our revenue grow up. So there are four committees, as I said: audit, remuneration, risk, and nominations. No one in the audit committee with financial knowledge or experience. As I said, Helga is looking after the 20% interest. I believe she should be, or the university representative should be, an executive director. She cannot be an NED because she's not independent. And also they have a significant influence in the company. 20% holding generally under IAS 28 gives a kind of a significant influence. This statement is very important in the pre-scene. We can see the vision, mission, and the values. Every answer that we are doing should be in line with your vision, mission, and the values. So all the time, whenever you're answering, look at that part of it and see that we cover up them very adequately. We should not do anything that is detrimental to the vision. We should not do anything that is not in the mission. And we should be always valuing the values. We must never do anything unethical. So high professionalism, total integrity, all those things are so important. So CIMA Code of Ethics reminds us again, highest ethical standards, and CIMA Code of Ethics are slightly updated on the January 20th to bring the digital flavor. And I can think of some questions in that area because this is digitalization. And with the CIMA Code of Ethics, you might find certain things. So better look at the new, the same five principles: integrity, confidentiality, objectivity, professional behavior, and professional duty and competency. But they have added up a little bit more to protect you and me, the CIMA people, from the digitalization which is happening. And we live in a world today in November 2020 with this COVID-19 prevalent. We live in a digital world very much, and therefore we need to be mindful of all kinds of things that could happen: internal control failures, ethical standard failures. We cannot compromise on that area. So we remember we are 475.9 million revenue 2019. Remember, we are sitting for the exam in 2020 November. The financial statements are almost 11 months old. Almost we are into the last month of the next year. So a lot of things could have got changed. This may be not an area that was definitely affected by COVID because most of these tenants would have taken their tenancy for 1 year period. And immediately you might not see any kind of a drawback in your financials as far as 31st December 2020 is concerned. But whether there will be any renewals happening, all those things we need to look at. So we need to be carefully looking in our cash flows, etc. The competitors, SciPark, got 417 million revenue. And so they are also just there somewhere. And then we have the consolidated. Remember, the statements what we have prepared is consolidated financial statements as of 31st December 2019. So statements are almost 1 year old. A lot of things would have happened during this period. So look for any information in the unseen in that regard. Don't try to speed read, try to be mindful, and don't try to assume that the 200 million or something cash what you had at the end of 2019 is still there. Many things should have happened. So look for the unseen there. This the technology parks or so-called science parks should be in ideal locations. I can see no reason why we should grumble about our location. We are close proximity to universities, large area for for expansion, in an outskirt of main city, closer to airports, hospital, hotels, etc. So I think it's an ideal hub what we have found, and this is your opportunity. As a company, we have got a right location, and that is so important. So you, as the senior manager finance, should be thinking in all the time how we are going to manage this area. Yeah. So uh, we have got an ideal location. So you as the senior manager in the finance division, advice into the board on special projects should be always mindful of your role as per CIMA blueprint of the role of the finance manager or the senior manager, and your role is to add value to the company, create value to the company. And in that regard, we should be looking, having this opportunity, what are we going to do with this one? So we had three executive directors looking after operations, finance, and HR. And we can say direct operation handling a load of work, information technology, maintenance, health, safety, landscaping, gardening, and marketing. Uh, I'm wondering whether we should have a marketing director here, because company need to be marketed. We need to keep our revenues rising up at a speed, because we are just about 6.6% or something last year. And of course, definitely when you compare with the return on capital employed, which is 4% and 2% range, this is all right. But actually you can do better. I'm done a industry analysis. When you see that one, you will see lot of things can be done in this area. So is direct operations overloaded? Our finance director, she has some work accounting and finance administration and legal. So there again, and we are providing this Kctp business services, which can be a profit center per se, and which can expand, because most of these organizations, our tenants are startups. They need lot of business services. And in the industry analysis, they say some of these industrial, the technological parks have not done well, because the tenants, they are good in their research and all that, but they need the business knowledge, business support, and even sometimes the financing, startup financing. So venture capitalists is the main source, but to get those money, they need some kind of assistance, which they may not have. So you and your finance division can play a massive role, and why not? You can make your revenue increase through by providing consultancy services, etc. Tenants basically startup companies. That means they have to have access for funding, venture capital funding. So getting this venture capital funding, as you and I know, is not very easy. You need to have right projects, project reports, etc. This is an area at which we can support our tenants. And then, of course, we do have the subsidiaries of large companies doing their R&D projects. There, they may not need our support, but they will need the good infrastructure and assurance of security, confidentiality. So this is why I think in the Preseen it says that when you are recruiting people, we recruit them with a lot of care. Those are very important things. Facilities required. So obviously we need to keep on investing on areas like high power electricity and high-speed data links. Site security is so important, and admin and other business support, what we discussed just now, parking space, water, convenience, like having, last time our case study was runabout micromobility. So having electric scooters, bicycles, all that kind of facilities will make your park a complete thing. the tenants will look for these items all the time. So every area, you have to keep on thinking of your investments, what we need to do. As a senior manager, you should be having a good idea of your future investments, what need to be done to keep in line with the tenants' needs. So a close collaboration with tenants to find out what they require, what their future plans, I think is the way to go forward. You're a senior manager in the finance function. You report directly to the board, advise on special projects and strategic matters. So you can see you don't have a routine role to play about. You have a more uh, non-routine roles, special projects, all the time thinking out of box, how to add value to the company, how to create value to my shareholders, and looking at strategic matters, long-term kind of thinking. You need to be very, very uh, thorough with your digital area. We need to know what's really happening in those areas. So CIMA has put up a lot of resource articles. I would urge you all to read those things for your case study. That will benefit them very much. So we have a 970 people in our staff. Most of the services are 24 by 7, health and safety, security, most of these areas. And I suppose that is so important because particularly with this COVID-19 happening, we cannot afford to have a carrier of COVID-19 come into the park. There are so many tenants altogether. I think we do have 18 buildings, 15 fully occupied sole tenants kind of thing. Then there are smaller 2 buildings, and then it's our administrative block with all these 970 staff located. So health and safety matters a lot, regulatory matters a lot, and also internal audit. This is a fantastic tool what the board has to use it to ensure to get an independent review of all what is happening inside the organization. So even though we cannot influence the internal audit, you are the senior manager, you can use the internal audit as a tool to get a lot of things done. Security, cyber security is so important, and all that is very, very important. I think they do provide uh, data storage, cloud facilities, etc., and these are very, very important areas. So as I said, the business service is a very important aspect because most of the business are startups. They need the administrative and financial support, even to the extent of sourcing financing. Maybe a good idea, I do not know. Maybe a good idea for us to collaborate with a venture capital company because most of our tenants are startups. They need venture capital funding. Maybe we can collaborate with one of those because the ecosystem is there. If they wish, they can pay to subcontract aspects of their bookkeeping, accounting, all that. This is all what you and your finance division can do for the company. You can be a profit center here. Unlike in many other cases, the finance division is a cost center. But here, you can be a profit center. Think like that. So in the industry, the tenant network can comprise these 1, 2, 3, 5, 6 areas. But we do not know because we can segment the area. We can decide these are our areas of tenant. Selecting the right tenant is so important. You have one wrong tenant coming up, the whole park reputation is gone. So as much as you have lot of backup check-in on your staff recruitment, before you sign a tenancy agreement, do a good due diligence. It's not only the financials, it's all about the ethical aspects of them, the reputation of the tenants. That also matters for you. If they come and do something inside your park which is unethical or something which is a scandal kind of a thing, that's going to have an impact. So they have to fall in line with all your health and safety measures nowadays. No one should be allowed to come without having the proper face mask or whatever those things, temperature check. So these are all. So we have to decide whether we want to go into all these 6 areas or whether we want to go to a particular segment so that we can get specialized. Because there are, remember, in Adviland country, there are 27 science parks. We are the number one largest. So we can provide for all 6, or we can specialize in certain areas, allowing others to do the other areas. And later on, maybe we can go for a merger or acquisition so that those areas we can separately manage. Again, I'm telling you, students, be out of box thinking. Think strategically. You have to come out with new kind of thing. So one of the risks is tenants not paying rent. So you may have to protect it by getting adequate bank guarantees, etc. And good backup check-in, background check-in, all that very important. Risk, we can see security is a very, very important one. So we need to see CCTV cameras, all this high-tech security all the time. Tenant turnover is another issue. We have to be mindful when a new tenant comes, what kind of a tenant is he? Health and safety, particularly with the COVID-19 prevalent, it's a very important area. No question, we need to be providing high IT all the time. Storage facilities, backup facilities, and cyber security, because this is between life and death. Your tenant is producing something totally a research what is doing on a new product. The information should never get leaked out, and sometimes they must be using your own server. So cyber security is so important. No viruses should go in. No, so we have experts in the cyber area, and all those risks must be properly identified through a proper risk management process on a proactive basis, and we need to attend to each and every one of those. I just gone through the financials, and you can see it is as at 31st December 2019. As I said, it's very old. So look for interim financial statements in the unseen, because being a listed company and IAS 34, you will be preparing interim financial statements. One thing we can see is there's a very high dividend payout ratio of our company, Kctp, compared to SciPath, where they pay a very, very low dividend payout. Share prices within the last 5 years, just there, 13 something to 14 to 15 or something like that, not a big change. So most likely the company, which is now almost 34 years old, people must be looking, in terms of at least listed for 21 years, must be looking for dividends. We can see that they are paying a dividend high payout, but return on equity is very low. It's something like 2% or something like that. And the other company, we do not know what their structure holding. They are just paying about 5% dividend payout. So there's a big contrast between the two companies in the dividend payout ratios, which I have worked it out in the next table, which I have given all the figures for you all to have a go at. I think we have been about 52.4% of dividend out of the last year's profit. So goodwill remains same, intangibles remain same, 330 million. So we are not very sure what these intangibles are here. Goodwill, of course, obviously, it must be what we have acquired. That must be the goodwill there. But intangibles, maybe the research what we do, or some what we have acquired. No NCI so far. That means they are fully owned subsidiaries, but it doesn't mean in the unseen they might say during the year they have gone for a acquisition with NCI, and then the treatment, all that. We have to be looking in the post-COVID scenario very much. And one thing what I observed in the financial statement is large cash balances. They do carry 264 million cash balance, and their total expenditure is also in the 200 million range. So, I mean, that expenditure may be including even depreciation. Even with depreciation, it's about, so why do they carry such cash balances? In the meantime, they have borrowed money also. So this is one area you as the senior manager finance, you want to see. Prepare a good cash flow and see why do we need to borrow money? Why are we holding so much of cash balances? You remember cash balances are needed only for three purposes: transactions motive, precautionary motive, and speculatory motive. So when your total expenses, including the depreciation, is around 200 million or something like that, why you should hold to such a big cash balance? And the worst thing is you are borrowing and you're paying interest. So this is what you should be looking at. Large cash balances, increased borrowings. So your financial structure, I think, needs some closer look at. Share price growth is just 13 to 14 or 5 years. So there is nothing. Shareholder expects return in two ways. One is the share price growth, other one is your dividends. They are paying 50 odd percent of their dividend earnings as a dividend, but still it's a very low return. So very much something to be concerned about. How long can we go on like this? And most of these the science parks are funded by government. But here we don't have government funding except for the 20% that had come from the university. So we have to seriously look at the market hypothesis. What kind of a market is this? Is it reacting to the information or is it not reacting? We can see it's very low, the systematic risk is 0.9, very much lower. That I would expect it to be because the business is a very safe kind of a business. You are basically, your assets are properties, so cannot come down in prices that drastically. That way you do have, I don't know, maybe you can use your revaluation methods. But that again, that will increase your asset values. It will indicate to the shareholder the values what they hold is much more than what they can see it in book. But on the other hand, return on capital can come down further if you do that one. So the strategy for me, as far as this company is concerned, is to keep on seeing the ways to increase revenue. And in my industry analysis, you will see that one very soon. So we can see the revenue growth is 6.68%, whereas SciPath, our competitor, has grown almost double, even though they are still not closer to us, but they are, last year the gap was 79 million, 370 and 449. This year the gap is 62 million. So they are closing the gap. We need to keep a close eye on our competitor. Total expenses, look at 240 million in 2019 to 24 million. But look at the cash, 264 million. Now, these expenses may be after depreciation, right? So before depreciation, the expenses may be very much below this also. Right? But we are holding more than 12 months of expenditure as a cash balance. I don't know why. And in the meantime, we are going and borrowing money. Operating margins, both the companies in the 50% kind of range. Dividend payout, very significant. We are paying 52%, whereas the other company is paying 5%. Return on capital very low, 3.46, 2.87, and 3.23%. ROE is much worse, 2.5. Generally, we would expect ROE to be much more than the ROCE because ROE is the shareholders. They take a bigger risk, but we can see it's the other way about. So I think in the capital structure in that area, there's a lot to do. Cash balance, balancing, forecasting, scenario planning are so important. Gearing, low, comparatively low, 13.9, 14.4. So there's room for gearing. In other words, you can borrow money so long as you can invest and make more attractive to tenants so that your revenues can go up. I think this is where you should be planning your strategy. And the other company also 15.11. So, low, very gearing. People may not be giving money, putting money because the returns are very low. But you need to think of something. Company had been in existence for 30 odd years. Now it's time for you to fly. You can't be crawling anymore. You have to think of doing something different. So the other issues that is in the pre-scene is about university knowledge exchange scheme. So there we have to think about our ecosystem. We need to work in close collaboration with the universities. You might find sometimes our founder university little bit getting disappointed if we try to work with the other universities. But I suppose today in the modern world, it is not so. You can collaborate and you need to get and work in collaboration. Inability of scientists to build their own inventions. So our science park can be the incubator for them to experiment their knowledge with practice, with practicals. These are the marketing themes what you can adopt. Simulated models coming into the front. So again, we as a park owners, we need to provide for these things to be done. The technology part of it, we need to keep on investing. That also we need to be looking all the time. Right? Role of 3D printers, we should be looking. Again, 3D printers have come to stay. So should we invest, because these people, our tenants, will need the need of 3D printers. Need for sound theory. Already we know that they have lot of theory and practice goes together. So that again, a role for us to play. So in the industry analysis, what I did, I was talking about the training school kind of thing, which we can do it. Data and energy cost issues. So sustainability reporting, integrated reporting is also a factor or a matter that we have to look at all the time. So these are the few things, my dear students, which I have picked up. So I'm Kumar from Learn with Kumar. If you are happy with this video, just subscribe to my channel, YouTube, Learn with Kumar, and you will have more of these things in the days to come. And also, if you want any information, you can contact me on WhatsApp 9477 I'll provide whatever the information, whatever the assistance you require. You need any assistance, you can write to me on email. My website is under construction very soon. It's being reconstructed. Very soon it will be available and we'll have a lot of videos there to watch. And as I said, I offer tuition global at very affordable rates. I have a 13 years of experience of online tuition now. I work with INSEF and now I work with Ultimate Access and also with Practice Test Academy. And now I do have my own students. So any one of you need tuition, please contact me. I'll provide everything. If you are in real need, free assistance to WhatsApp always. And even the rates, I make it very, very affordable for you all. So once again, students, thank you very much. I want to wish every one of you good luck for this Kctp Preseen and the case study. This is your last hurdle. Jump through this hurdle and you will have those 4 letters coming behind your name, which will make a huge difference in your setup. So I pray for all of you. If you need any information, just get in touch with me. So I'm Kumar from Learn with Kumar, guaranteeing success at affordable rates. Thank you very much.